Peace, peace, peace unto you all. Welcome, welcome, welcome. We are here for another live update for all the tax preparers. Peace and blessings to you all. Much love to you. If you don't know me by now, hey, I'm Moses Adesimilolu, Lashana Adesimilolu, which is my partner. My wife, she's not here right now, but she's definitely in here in spirit. Before we go ahead and get started, I first of all want to say congratulations to the tax preparers out there who actually stepped up and actually put yourself out of your comfort zone and did some videos. So wherever you at, just give yourselves a round of applause. Yes, yes, yes. Just give yourselves a round of applause because you are doing something that most people are not doing. So you're actually putting yourself in so much greatness and so much good stuff. All right, so because we said that every whoever does the video will get into the sweepstake that we are given. And guess what, y'all? Guess what? We have the famous wheel. Yeah. We're gonna be using this a lot this year. This is the famous wheel. I don't know if you all can see that a little bit. So I got Susie, Suzette, Crystal on there. And what I'm gonna do right now is spin the wheel. So whoever wins right now on this wheel will get the gift card that we said we was gonna give you, right? Now, drum roll, everybody. Let's go. Who's gonna get it? Who's gonna get it? Who is going to get it? Nobody? Okay, we're gonna try one more time. One more time. Well, at least we get somebody, right? Who's gonna get it? Wow. Did y'all see that? Who is it? Susie! Yeah, congratulations, Susie. Awesome, awesome. You won once again. Congratulations to you. You will be notified with your gift very, very soon. You know we're good for it. All right. Okay, awesome sauce. Now we're going to go ahead and start now. Okay, so we're going to go ahead and start now. And as we start, we will talk about these updates. So if you have, I'm just checking the to see if y'all leave in the comments so I could respond. If you have any comments, you have any questions as I go with this, feel free to respond, okay? All right, let's get it. Let's get it. Okay, the tax deduction has been updated. The standard deduction has been updated. And if you all could see, it says that the taxpayers who do not itemize the deduction on the Schedule A can take advantage of the standard deduction. Now, standard deduction basically is going to apply for individuals mainly who are getting a W-2. So if they're receiving a W-2, more than likely they're going to be on a standard deduction. As far as itemized deduction, they're not really, it's not really anything for them. And if you could see right there, clearly it says they're going to get $12,400. So this is based on their expenses. So how much expenses they incurred for the year of 2020, which we're about to do right now, if they spend $12,400 or less, that's it. So no other deduction. And mind you, this is for single, right? So if they're married filing jointly, they go to 24,000. And as you can see, this is based on their ages as well, okay? Most of our clients are going to be under 65. The few that we get a little older, this is what applies to them. And married filers separately, they get for married filers separately under here, under 65, they get 12,400, just like as you are single. But if the spouse itemizes deduction, they get 0. keep that in mind. So for instance, if they're filing separately and then the husband itemizes the deduction, maybe he's a truck driver or, Schedule C, he itemizes the deduction, the spouse gets 0. The head of household, they will get $18,650. So this, what I'm saying they will get is, this is the credit that they are getting on their tax return. Now, this is based on their expenses that they spent. Okay, this is pretty much the standard deduction for individuals who are receiving a W-2, or individuals who are employed at a job, or individuals who didn't incur expenses that are more than the amount that is listed right here. Now let's go ahead to the next one, education credits. Yes, yes, yes. For the people that are in school, they are about to get their Now people might think that they're not supposed to get education credit. I actually had a taxpayer who went to school, and she's been going to school for all these years. The year that she came to me, I asked her, well, not all these years, for like 2-3 years. And the year she came to me, I asked her, hey, have you been claiming your deductions on your school? And she's like, what? I'm like, you could claim a deduction on your school and you get extra credit. She's like, what? The person that she was going to was not even giving her this information. So this is why it's important for we to let our taxpayers know, because they don't know. And this is why we're professionals. So we know, and then we give that knowledge to them. So yes, education credits, it's a big one. The education will be for the ones who are in school. If you went to school and stuff like that, you get to get credit on your return, the tuition deduction credits, and it's basically $1,000 extra for individuals. They add $1,000 to that. Some of you already know this. It's a good credit to get as you go to school. It's very, very, very important. Now, the gifts. The annual gifts exclusion still remains $1,500. So if you are given a gift, it still remains $15,000. So like if you gave somebody a gift and it's less than $15,000, you get to claim that gift as your annual gift exclusion. Now I want to inquire here about education, something here that's important. How about the educators? Educators now get to write off their expenses. Now, this is also based on what is eligible to them. If the standard deduction amounts, it still kind of applies to this. However, if they spend more money, then they still get this educator expenses. And they can deduct up to $250 of the qualified out-of-pocket expenses that they spent for 2020. So if they bought pencils and even their uniforms and work clothes, any kind of things that they incurred pertaining to the educator lecturers, this is what I'm talking about, they get to write off at least $250 of that. All right. Filing status. It's important. We should always get to ask our taxpayers, what is your, if married, are you filing jointly, separately, you a head of household? We ask them these questions. And if they are in any of this filing status, then they can file a return if their gross income was at least $12,400. So if they acquired at least $12,400 for their gross income after you put in their income and their expenses, and it comes up, it calculates the AGI, the annual gross income. If that income is less than, was at least 12,000, not less than, was at least 12,000, then they are required to file. They get to file their taxes. And this goes for the people who are married, filing jointly as well. So this is just information that you get to tell your taxpayers. If this person is head of household and they made at least 18,000, for all those people who are head of household, who probably work from home, who are not really reporting their income, this would apply to them. If you made at least 18,000, you tell the people, hey, if you made at least 18,000, you get to file. And you don't really actually need a W-2. You just need to show proof that you actually made 18,000 or more. You show proof of your log sheet, and then you can file. This is important because some people don't realize that they can file and then they miss money on the table. It's actually said that IRS is begging people to file their taxes now because there's so much money on the table that they're not ever claiming. So this is what we do by informing our people that, hey, you can file. All right. Now the adoption credits here, we can see adoption credits. They did update this one here, adoption credits here. Let's see. Okay. If we see the adoption credits here, we can see that for 2020, the maximum adoption credit is the amount of qualified adoption expenses up to 14,000. So if they actually incurred, if they incurred that much expenses for up to 14,000, they spent, 14,000 and above. Then, no, not 14,000 above. Oof, makes my words here. If they incurred up to 14,300, they get to, claim that as an expenses for themselves. So if you adopt a child, you get to incur up to 14,000. For 2019, it's a little different. You can see the amounts here for 2020, it's going to be this amount. So for 2020, if the modified adjusted gross income is $214,520 or less, then the income limits will not affect the credits. So that means that if they made 214,000 or less, then this income limit, it will not affect the credit. If they made between 214 and 254, then it will reduce, the income limit will reduce the credits that they are actually giving the people. And if they made, more than $250,000, 254, if they made up more than that, it's eliminated. We already know those people, when you get up there, a lot of credits are not really available for you because they're expecting you to pay more taxes because you made more money. That's just how it goes. Now, let's keep in mind, if you can see at the bottom of the screen right here, it said qualified adoption expenses include adoption fees, attorney fees, court fees, travel expenses. It does not include expenses for which taxpayer receives funds under state's, local, or federal program. They can't put that in. If they're carrying out a surrogate parenting agreement, if they were paid or reimbursed by an employer or any part of organization, if they paid for the expenses, they can't put that in there. This is something that, you want to tell the child. You want to ask them all these questions and know, okay, will they actually get their adoption credit? All right, let's keep it moving, people. Let's push it in. A premium tax credit. We know what that is, premium tax credit. And it's basically, the credit that they give with the Obamacare, the healthcare marketplace. This is a great credit that you could use right now. Let's bring it back. This is a great credit that you could use right now, and it could actually help you out a whole lot. And taxpayers who purchase health care coverage through the marketplace, they could credit, they'll have to fill the Form 8962. Now, it's important to always ask your taxpayers that, hey, did you get Obamacare? Did you have the insurance with a healthcare marketplace? Because if you don't, this is what the IRS do. If they don't put this Form 8962 on file, they get to hold their money. And they hold that money until they can prove that, okay, they received the form, and you will have to actually fill that form for them and actually fax it to the IRS. So this is why it's important to just ask them from the get-go and say, okay, you have to provide me with this document before I can process your file. I'm not going to process your file because they're going to hold your money. So provide me with a document so I can give it to you and process this file. Y'all can see right at the teddy bears, some of them are like, they're like broken teddy bears. You got to actually help them out. That don't mean it in a bad way, like, for real. We got to actually help our people out. And it's really sharing the knowledge and helping people out and giving them the knowledge so they can actually grow and help somebody else. So that's the premium tax credit. Very, very important credit right there for most of our clients who are low income. Tuition credits. So this is what I was getting at right here from the other slide. It's now just elaborated more right here. The tuition credits right here is what they could file, and they get to do the American Opportunity Credits, which is for 4 years. Remember the story of the lady? She was going to school for about 3 years, so she still was eligible to get the American Opportunity Credit. However, once she graduates, like somebody like me now, who's doing my second master's, I get to do the lifetime learning credit. Now, it's not up to $1,000 that they give you, as you can see right there. It's up to $1,000, but they give you a little something to help your taxes, to reduce your taxable income. Now, you see, they say it's non-refundable, so they ain't giving you nothing back, but they give you something to actually, reduce your taxable income. As you can see right now, the maximum credit is 20% qualified expenses up to $10,000, and the maximum credit for American Opportunity is 100%, straight up, 100%. Maximum credits, 100% of the first 2,000 of qualified expenses plus 20% of the next 2,000. So, yeah, they look out for those. They look out for those. Jump the screens here. Okay. Look out for those. Now, this is the tuition credits. You go to school anytime last year? Did you go to school? If you went to school, okay, we need the school form, because that school form is the 1098T that you get, and you actually want to give me this form so I can put it on your taxes and you can get more money. You can either save more money or get a bigger refund. Hey, we're looking out for you. This is how you get them, people. This is just how you just tell them and push it like that. Okay, now my screen is jumping, so bear with me here. Other dependent screen, other dependent credits. All right. Now, this is for individuals. They didn't used to do this. This is just something that they started doing. As you can see, they started in 2018. And I remember when I was at the IRS tax form 2 years ago when they was talking about this, and I was like, it's really something serious, because now I think they just said, you know what, we all know that you all claim each other anyway, so just put it under other dependent credit, okay? So this is just an extra way for somebody who has a non-child dependent or a child who does not qualify for the child tax credits. They could get the other dependent credit, right? Y'all see over here, they're looking out for the people. So this is a few changes that they made in 2017, and just last year. Just 2017 it was 1,000. But now they've actually upgraded the child tax credits to 2,000 now. So that's why people are getting bigger refunds. Now, for the non-child dependent credit, other dependent credits, they are giving us 500 for that, which is pretty good. Income threshold, they put it to 2,500 from 3,000, and the income phase out for marriage filing jointly now it's at 400,000. So they will have to actually make up to 400,000 and beyond. They'll have to make more than 400,000 for them, not to really get the full amount no more. So they're helping people out now. And income phase out for others is now 200,000. So this is thing that you could tell your people as well, that hey, do you have like people that might live with their nieces or live with their cousins or anything like that, live with any kind of other family member, other dependent credits, you could claim this person as long as your adjusted gross income is more than them and they are not required to file their taxes. Okay. 1 second here. All right, let's keep it moving here. So now we got the earned income credit. The earned income credits, I mean, something that we all want. The earned income credit, for real. Peep this out, y'all. Peep this out. They don't increase the money, like a couple $100 more, but hey, it's something, right? It adds up. So the earned income credit for 2020, it's increased. If a child payer has no children, 15,820. If they're married filing jointly, then they get 21,710 or more. And if they have one child, the eligibility is 41,000. So this is the amount of money that they actually have made. Let's not confuse each other here. This is the amount of money on their adjusted gross income. So this is what's going to give them the ability to get some kind of credit. So if they have 2 children, they'll made by 47 for the single, and they have 3 or more children, it's 50,000. For married filing jointly, is excuse me, y'all, I'm sorry. For married filing jointly is 56,844. A taxpayer must be able to take the credit if their AGI is less than the amount above that applies. The maximum amount of investment income a taxpayer can receive so hey, there's more money out there for people, there's more money out there for everybody. It's a reminder that says married taxpayers must have been separated from their spouses for at least 6 months of the tax year to be eligible for the household filing status. Otherwise, the taxpayer is required to file married filing jointly or married filing separately. And married filing separately taxpayers are not eligible for EITC. This is really, really important to let your taxpayers know that if they have got out of their house with their spouse, living with the spouse for the last 6 months, yeah, okay, then they could be eligible. But if it's less than 6 months, then they're not gonna be eligible to get the head of household or file single. They will have to file either married filing jointly or married filing separate. Very, very important key right there. Very, very, very important. All right, the mileage rates. Yes, yes, yes. You could definitely claim your mileage rates. And it's very, very important to know that you could claim your mileage rates to save you money on your taxes. Like for real, And a lot of people don't know that, but let's keep this in mind though. If you are a W-2 employee, first of all, you can't really itemize on your taxes, so you let them know. So as far as mileage, you can't really claim your mileage. If your mileage is not more than 12,000, as they have said, 12,000, close to 13,000, you can't really claim your mileage. And most people, they're not up to that level. So, however, if you're a business owner now, hey, business owners, where you at? My independent contractors, if you're a business owner, you could claim this mileage. And the IRS is actually, saying, look, claim those mileages and say, get some money, save you some money on your taxes and get some money back. Business taxpayers who use the vehicle in the everyday operation of their business will report the mileage deduction of their business return, such as the Schedule C of Form 1065, Form 1120S, that's for the S corporations, or Form 120. And this is something where they could, as far as you are logging your mile, and it's very important. Let your taxpayers know that, hey, download a mile log app. There's Mile IQ. There's all kinds of other mile log apps that they could download and actually now start to use that to track their miles. I don't know, because a lot of Uber drivers, a lot of Lyft drivers, a lot of delivery drivers who put a lot of miles on their car, put a lot of miles on their business, don't remember to download this. So this is important for you to let them know that, hey, download the app, use the app and use it for yourself, and you'll see how much money you are actually saving on your taxes when you start incorporating this laws, incorporating this credit. So just a quick recap for every single one of us right now. I talked about the mileage rates, talked about the earned income credit and income tax credits, talked about the other dependent credits, very important. The tuition credits, yes. The education credits is so important. The premium tax credits for the members of the healthcare marketplace. And we have the adoption credit. So if you adopted a child, you could get some of these credits. However, it needs to be applicable to what you're doing. It cannot be, you get to have up to 14,000 of your expenses to write off. And your filing status. What is your filing status? You ask the people, hey, what is your filing status? Were you single? Were you married, filing jointly? We all know when you're married, filing jointly, you got to ask them again. Or you married, filing separately, you got to ask them again. Okay, how long have you separated? If you separated over 6 months, well, then you don't need to file married, file separately, so you can get the maximum credits. But if you're under 6 months, then yeah. And gifts, it still remains the same. Now, the gifts, it still kind of ties into the standard deduction. If it's not more than 12,000, it still remains at 1,500. But if it's not more, if 15,000, if it's not more than the amount of the standard deduction, then the amount that you put in would not really make a substantial difference. And we talked about the education credit. However, the educators also could claim a credit. It also goes to the standard deduction as well. And the standard deduction for all W-2 employees or individuals who are not itemizing on their deductions get to actually use this, what they've already put on there to save taxes. And it's for 12,400 if you're under 65 and single. You're under 65, married, filing jointly, you get 24,800, and so on. Okay, beautiful people. That's the recap of all the tax deductions, all the credits that you could share with your people as a knowledge base, and you could look very, very professional and everything, and really, start to let them know that, hey, different events and talk to people. There are a lot of virtual events going on right now. You could go to virtual events, you could speak to people, you could join, different groups and go in there and let them know, because right now people might not be thinking about taxes, but there will be very soon. And the fact that you're already telling them right now, you're already dropping the seed. You're dropping the seed. And that's the key, people. Us dropping the seed for what we're doing, showing ourselves and showing our growth and showing that we are professionals. We know what we're talking about. We know what we're doing. Like I was telling one of our new tax preparers, it doesn't matter if you actually don't know, a lot of this laws. It doesn't matter if you don't know a lot of these updates. You could definitely say, hey, I know about this. Let me give me a moment. Let me just confirm it. You could just give either me, LaShawn, any other tax preparers on here that's experienced. You could just be like, hey, what do you normally tell your client for this situation? This is how we could all get to work together. So I want us all to be participating more in this group, working together and just showing our growth, showing how we're working as one, because that's what's important. Beautiful people.